Hello, welcome to today's Market Snapshot from LCG. So the Dow Jones just had an 8-day losing streak. That's the worst run since 2011 for the major US stock index. And so we want to have a look at our chart, our proxy for the Dow in just a minute, the Wall Street product, and assess what this means for the trend. Actually, there was a bit of a strong reversal off the lows at the end of the US session yesterday. And we've actually hit some important levels on the chart, and it all came alongside discussion from Donald Trump that he will look to consolidate in perhaps the same bill, that of spending and tax cuts. So obviously there's been a lot of disappointment over the failure of the healthcare bill. That hasn't passed through Congress. Looks like the administration are moving on, and Donald Trump's next target is going to be the more market-friendly tax and spending reform. Now, whether he can get this through Congress is obviously anyone's guess, but we're looking pretty oversold in what's a very strong bullish market. So we're just looking to have a look at the chart now to see what that means for the trend going forward. So this is our daily candlestick chart for Wall Street, and you can see that we had that strong run up most recently using the low here from mid-January, where we had a bit of a kind of run up in the price. We basically consolidated just below 20,000, if you remember. Then we finally broke 20,000 and rocketed all the way past 21,000. So we're retracing that move, and you'll note here that we've hit the 50% retracement, and this is the strong rebound off the lows that I'm talking about that took place yesterday. That is a strong reversal candlestick. It's a kind of combination of a doji and a hammer pattern on the daily chart. They're both bullish reversals, and they're at a combination of support from the 50% fib retracement and the 50-period moving average, which I noted on Twitter yesterday, which we haven't actually dropped through since the US election. So clearly the market's been rolling over, but some potential that we're beginning to end the recovery. So if we drop down to the short-term chart, what we're looking for is some signs that this little mini top here around 2590 to 2600 is actually seeing some determined break to the top side to confirm that this momentum is going to continue. So it's possible and almost ideal that we see a bit of a pullback and a retest of the lows, and then ideally a successful test and a pushback higher in combination with the moving averages starting to roll over. That would confirm to us that this correction in the market's over and we're pushing back to the top side again. So that's it for our snapshot today. We're looking at Wall Street, our proxy for the Dow Jones in the US. There's been a hefty sell-off, the biggest sell-off over 8 days since 2011, but perhaps some signs that it's about to end on hopes over Donald Trump's tax and spending plans. If you did enjoy this video, please subscribe to LCG on the various social media channels. Thanks.